Thank you, everyone. Thank you for joining. Welcome to today's webinar. Hmm. I appreciate your time and presence here. Over the course of this webinar, we will deep dive into input service distributor. My name is Nishita, your host for today. I've been working with Cygnet.One for the past 3 years in the marketing department. I will begin the webinar by introducing the speakers for today. We have Mr. Kulraj Ashmanani, a seasoned expert who has over 15 years of experience in indirect taxes and regulatory framework. Kulraj brings a wealth of knowledge in GST, customs, and trade policies, having guided diverse industries and represented clients before government bodies and ministries. We also have Mr. Ranjit Mahtani, who is a qualified advocate and a chartered accountant and has more than 18 years of experience in taxation. He specializes in and focuses on all indirect taxes, including GST, custom duties, foreign trade policies. He was previously engaged with erstwhile indirect taxes of general excise duties, sales tax, service tax, and entertainment tax. We have with us Mr. First Ganavelia, who is a qualified CA MCS with close to 15 years of experience. He specializes in handling payment of services in indirect taxes, which includes advisory, litigation, health checks, and compliance services. Currently, as Associated Vice President at Cygnet.One, he leads a team focused providing solutions in India GST and e-invoicing, as well as global VAT and e-invoicing. Lastly, we have with us Mr. Neeraj Hatti Singh, founder and managing director at Cygnet.One. He is a seasoned entrepreneur with over 30 years of experience across industries, including IT, manufacturing, chemicals, and services. Under his leadership, Cygnet.One has become a trusted partner in digital engineering and business process transformation, empowering organizations to enhance their strategic decision making and operational efficiency. He also focuses on building innovation, automated, and futuristic tech solutions for the business. So I think we can begin the webinar. Mr. Kulraj, you can share your screen. And
Yes, shadows.
Is my screen visible to everyone?
Yeah, Kulraj, your screen is visible. Can I just set the context for maybe 2 minutes and then you can take it over?
Yeah, most certainly, please.
Thank you so much, Kulraj. So I think from the many conversations that we have with the industry, with GST and with multiple different authorities, the ISD distribution, which will become live from 1st April, is going to be a very complex and genuinely a difficult area for industry to adapt in a big way. So when we have this conversation with the industry, it's not just simply distributing the expenses to an extent, but finding out how we come up with a real information technology solution, which will help in terms of automating this area. So the challenges are both ways in terms of technical, how do we adapt to it and ensure that we get the vendors to invoice in the right fashion. At the same time, how do we adapt to the right technology solution by which the adoption becomes much more easier? There are many conversations in which people wanted to take an easy way out, invoice in the straight way, cross-charge it to the ISD registration and take it away. But all of this implementation, we should always try and find out how it will be viewed from the authority standpoint. And this is extremely critical when we debate today or when we go through the nuances of this section. So that is important that we understand into the technical as well as the technology terms, what is the best fit and what is the right solution for it. All of our team from Dhruva and team from Cygnet will walk you through the solutions in a much more detailed way. But this requires debate, this requires quality implementation, and this requires a technology solution. Having said this, I will hand it over back to Kulraj to take you through the deeper nuances of the same. Thank you. Over to you, Kulraj.
Thank you, Neeraj sir. Kunal, so I think let's start in a fashion of I'll be asking you a couple of questions around the ISD, and let's start with you know the background, legal and procedural aspects of ISD. Please throw some light on that.
Yeah, thank you. Thank you, Tapas. Thank you, Neeraj, for the words. And thank you, everyone. Welcome to this webinar. I'll be first starting with the introductory part of the input service distributor mechanism. Before we kind of run through the slide, let me kind of update. And it's not something that is a new concept that we all are dealing or will be talking up in the next hour or so. We had this concept under the erstwhile excise regime where the concept of input service distributor was very much applicable to distribute credit of common services to the units, typically the excisable units or the service units under a centralized registration scheme. The system remains typically the same. It has been borrowed under the GST regime, but never made as a mandatory implementable method. ISD was always an option given to taxpayers to choose amongst the cross-charging route, which was charging of expenses with GST, which typically was more formidable in terms of it was easy on compliance, no further registration, and so on. So therefore, it was a method that was mostly adopted by the industry at large. However, at the roots of thing, ISD remains as the mechanism which was there in the law right from 2017. Because the industry had been adopting different practices of distributing credit on account of common expenses, government in all wisdom would have thought that let us streamline this up in some shape or the other, and therefore ISD got a mandatory implementation from 1st of April 2025. So it got a new life when the government would refrain from any person using cross-charging as a mechanism henceforth, and ISD would need to be implemented by business at large. So typically that being the foundation of the discussion, let us start and talking about the ISD as a mechanism as applicable under GST regime currently. So Section 261 of the GST Act defined ISD to be an office of supplier of goods or services of both, who receive tax invoice for input services on behalf of other distinct person, and this distributes the ITC. What is important to understand is the phraseology used is that an ISD is an office of a supplier who is not engaged in providing any service per se, who is only receiving invoice on account of services on behalf of other distinct person. So if typically this gets applicable, if a taxpayer has multiple registration, and if single registration gets certain invoices on account of certain services, which has either be used by the other registration or amongst all the registration. In such case, the ISD becomes a foray of a discussion wherein it is regarded an office who receives the invoice and thus distributes the ITC subsequently to other GSTNs. The law provides typically 5 provisions. Section 20 is the provision who talks about how the distribution shall happen. 24 talks about a mandatory registration of ISD, which was till now an optional registration. Rule 39 is an important regulatory mechanism which brings about how the distribution of ITC shall so happen between the taxpayers. The distribution mechanism has been brought out, and it is fundamentally on the basis of turnover only. Rule 54 talks about a very important aspect of the ISD mechanism, and it talks about an invoice to be given by a normal taxpayer to an ISD. And we'll talk about it as we move forward. And Rule 65 talks about filing of returns by an ISD. And we'll cover all these into details, but these are fundamentally the 5 key provisions under the GST law which talks about ISD in detail. The question that has brought, and that has been a debating point, and as I kind of discussed why ISD was necessary. Till now, if you talk about an organization which has a multiple registration setup, there were 2 kinds of invoices that were generally received. One is the third-party invoices for, let's say, common services, which could be a telecommunication, an insurance, a legal and consultant services, a marketing services. And there could be certain expenses which the such central office would have been incurring, or typically HO would so be incurring, which would be normal HO running expenses, rental, overheads, IT cost, some employee cost, some HR cost, and so on. Until now, cross-charge was typically the mode that has been adopted by a large amount of taxpayers owing to certain advantages. From 1st of April 2025, a taxpayer would hence be adopted and hence be compelled to adopt 2 routes to tackle this transaction on account of all internal generated services, which is all the office running expenses by an HO, an IT, and HR, which would include, that would continue to be routed through a cross-charging mechanism. But the common services expenses of telecommunication, insurance, legal professional fees incurred for the company as a whole would be mandatorily be routed through an ISD mechanism. When we say that we would like to kind of highlight about the internal generated services, this has been clarified by the government that a deemed nil value shall be so accepted. So therefore, if we rule out right the left part, which is the cross charging part, from April 2025, ISD as a mechanism would still be required to be followed by taxpayers henceforth. So therefore, if cross charging was not done by taxpayers who were availing the entire credit, that was fine as a mechanism till now. But yes, from April 2025 onwards, ISD would be mandatorily required to be adopted as a mechanism. The fundamental difference between cross-chain and ISD is important for us to analyze, and therefore the regulatory part will become more clear. And ISD, if we bring out comparisons, an ISD is a mechanism which will require a separate registration to be taken. A cross-charge was a mechanism that could happen in same registration. ISD, you need to only basket services, and that to common services. Under a cross-charge mechanism, basketing of goods and services, both were kind of permissible. ISD will be required to distribute credit on a monthly basis. So whatever you and ISD receives as amount of credit, it would require to be passed on. Under cross-charge, there was no specific frequency of distribution of credit. So it could be a month, it could be a quarter, it could be an annual, whatever is feasible to a taxpayer and so on. Under ISD, the distribution shall happen on the basis of a predefined turnover ratio. Cross-charge gave the flexibility to taxpayer, and in fact, as we mentioned, if the recipients were entitled to entire credit, a valuation under 28 was so can be adopted, and therefore a nil value would have been a deemed transaction value for also purposes. Under an ISD, a taxpayer is required to distribute eligible credit as well as ineligible credit, and both distributions shall happen separately. So let's say if there is a general service, it's a legal and professional services which is eligible, that credit shall happen on a monthly distribution. And let's say if it's an ineligible service, let's say lease rental of a motor vehicle which is ineligible, that distribution shall also happen. And therefore, ultimately, the costing impact of the credit that it has to be taken or not will be done by the ultimate recipient unit and not the ISD. ISD will transfer everything that comes across to it. And ISD will have a specific and a separate invoice to be issued, which is an ISD invoice. A cross-charging could have been done in a normal tax invoice scenario. So what brings across in the ISD framework is a lot of more compliance, but yes, from a department perspective, from an industry perspective, it brings about a streamlined mechanism which is followed by industry at large. So for sure, a forward-looking approach by the government, but yes, it will lead to an increased compliance by the taxpayers. Sure.
Neeraj sir, you want to add something to this? You raised your hand. No, I think let's move on. Thanks, Kulraj. Rajit, do you see a possibility of a single GSTN entity to take ISD registrations in other state? This would be a relevant question because there would be many entities who are involved in renting construction activities across India. And a question would also arise, can taxpayers opt for multiple ISD registrations?
Yeah, thanks, Tapas. Yeah, there would be possibly situations where there would be a need to take ISD registrations in other states where you do not have an output liability, but you do receive certain services. But it will really depend on the nature of the services, because in certain instances, it may not be possible to distribute that credit out into another state. Yes, you are right in saying that in the context of the sector which is renting or construction, this may become far more important and relevant. And for them to sort of obtain that sort of a registration of ISD and then sort of cause the transfer of the credits, the distribution of the credits will be something that will be important and needs to be evaluated. As you know, you go about laying out your plan, your blueprint for your organization to have a ISD mechanism where all is the touch point and how the distribution is to take place. This will be an important consideration in that as well.
No, that's
As we go ahead, can I just maybe first make two comments and then there's a question I would want to sort of ask
Yes, Amin.
Kulraj. The two comments are like this. We've had ISD as a concept exist in our service tax law, in the SENVAT credit law for quite some time. And we've seen, enough number of sort of issues and disputes arise in terms of from whom the recovery should happen, whether it should be the recipient side or it should be the origin side. And we've seen views emerging on both fronts. Thankfully, the GST law has sought to address that. There's also been a lot of debate and confusion of what the turnover ratio, etc., should be. Now, as we go into the GST law, the distribution mechanism, the manner in which it should happen, Kulraj talked about ineligible, eligible, both being distributed. These are things which I think we have to acknowledge has been a fine tuning over the earlier regime and the earlier law as we are now moving in the GST regime. Okay, so that was one thing. As we talk about the mechanism in a few minutes from now, it'll make sense as to what my comment is. The second comment is considering a advance ruling which was passed back in December of 2018 from the Maharashtra Authority for Advance Ruling. Quite interestingly, at that stage they said that ISD is almost as if to say it is important, it is mandatory. Who knew that what the Advance Ruling Authority would say in December 2018, in April of 2025, it would become reality. Here we are discussing that. Okay, so the question that I would sort of want to first pose to Kulraj is, there is one interesting aspect which is in Rule 54(1)(a), which provides or contemplates that a unit can transfer common ITC to an ISD registration, which thereafter can do what is necessary in terms of a distribution action. What do you sort of make out of this? What do you think about this?
Ranjit, this was a provision that existed till now, and I'm not sure how much is this applicability going forward. But one thing that I missed kind of discussing it, which is an important aspect of it, is that ISD till now was not able to pay any taxes under reverse charge mechanism. It was only receiving and then distributing it up. And therefore, in that mechanism, there used to be situations where the reverse charge taxes on common services was used to be made by a normal tax registration. And that registration used to transfer the credit to an ISD through this mechanism of invoice, which was listed in 54(1)(a). One could also play around to say that if an ISD was being followed, but the invoice was not issued to an ISD registration, was to issue to a normal registration, that the government provided a leeway that such transfer of input credit of common expenses can happen through an invoice mentioned under 54(1)(a), which is an exceptional invoice situation. And if we continue that up, it would mean entirely, now there are two aspects to which change. One is that law has such been evolved that an ISD could possibly pay taxes under reverse charge mechanism. So the first part actually is taken care of. But there still could be situations that a normal registration receives an invoice for certain common services, and after receiving of the invoice, it so believes, okay, it cannot take the credit. Then the option is given through this mechanism to transfer the credit to an ISD registration, which can henceforth for sure transferred in going forward. But yes, that's possibly a benefit that has been given to taxpayers, that if you have received an invoice which you ought not to have received in the normal registration, you can very well transfer the credit to an ISD who can subsequently distribute it through to other taxpayer using the ISD invoice. So therefore, it's a beneficial provision which provides a leeway to taxpayer to further kind of work around the ISD mechanism in difficult situations.
So clearly, it's a facilitation, although it will add a layer of work in the bargain.
It does. But yes, again, a facilitation comes with a certain cost in terms of more compliance, but that's something that taxpayers would have to deal with.
Right. Okay. Having discussed all of this, I think it's very important that we also understand the ITC distribution mechanism through the ISD approach. And the next few slides will, sort of walk through that. Kulraj, can you take the next slide? So these slides are essentially going to, summarize the provisions contained in Section 20 and in Rule 39 in explaining as to how and what is really going to go into us distributing and us using the ISD registration for the purposes of distribution of ITC. There's also an example I will take up in a bit. So the first thing that we have to bear in mind is that services that are common in nature and they pertain to one or more of the states or the registrations, that's what is under the pool for distribution. And that's very important because that needs to be defined very clearly. The second thing is that the distribution happens to all the relevant recipients, which are enjoying or are going to have to enjoy that ITC in respect of that service. There could be one, there could be many, but the fact is that it's not in respect of that ISD registration and it has to go out. And that's why an ISD at the end of the day, whichever way you look at it, should have a nil register after it's done the distribution as per the provisions of the law. The next point, and this is an important one, is that what is it that the basis or the base or the formula that you have to apply to distribute this particular credit that is sitting in the ISD? The provision is specific to say that it's the turnover ratio of such states, the relevant states to whom the distribution is to happen, of the previous financial year. Now, in the event that there isn't a existence of a particular unit or units in the previous financial year, then you have to go back to the immediate preceding quarter in the given financial year, in which month you are making the distribution. You take the quarter just before that. So, for example, if you're talking about July, that in 2025 of July, you want to make a distribution, you can look at the turnover in the months of April to June of 2025. You need not go back to the previous year. The other aspect that needs to be kept in mind, and this is again where technology will play some sort of role, an important role, I would think, is that you need to have the bucketing in CGST, SGST, IGST, and neither to be distributed individually. Of course, they will all go through one sort of invoice and one sort of clubbed document, but at the back end, there will need to be a demarcation and there will need to be a identification for the three pools. In equal part, and this is something that Kulraj has also talked about, the ineligible ITC is also to be distributed, and that has to be distributed separately so that it's identified. Kulraj, you can take the next slide. Okay, so here we sort of try to just mention that previously you had an existing format and really going forward from April 2025, what happens? And let's just focus on, effective April of 2025. So ITC pertaining to multiple units, the ISD registration distributes it from the ISD registration itself. Or there could be a situation where a regular registration, for example, in this case, we have said the head office has a registration, where it also has the ISD registration, and that makes the distribution or the transfer. Now, in the situation where there is a credit lying in one particular registration, which does not have an ISD registration, but it pertains to multiple beneficiaries, it will have to move to the ISD first, and then the ISD will do the distribution, as is mentioned here on the right-hand side of your slide. The credit that is attributable to a specific unit can only move or be allocated to that particular, or distributed, the correct word to use is distributed, to that particular unit alone, and it cannot move to other units. Thanks. Now, here's clarity that we would like to bring onto the table to say that when I receive ITC as IGST, as CGST, or as SGST, UGST, how and in what shape does it move out and move to the distributee, the receiver unit that we have? So if we walk through this slide, you'll see IGST received from state A, where it is to be distributed to state A, it will go as IGST. If it has to go from A to B, it will again go as IGST. Now, if instead of IGST, there was a CGST invoice that was the income, it went from state A to state A, it remains there as CGST. The important thing to remember here is it does not convert into IGST in any way. So therefore, when it moves from state A to state B, it moves as IGST, but it cannot move as CGST. So please appreciate the distinction that is being made here. A to A goes as CGST, A to B moves as IGST. This interchangeability cannot happen. And in the situation that you may have a error and somebody, puts it in the other way around, that could cause a difficulty at a later point in time. Now, similar is the sort of position for the state tax, where A to A goes as SGST and A to B goes as IGST. Right. So not in the A to A as a state or as a center, we have to remember, and that's where the sort of critical plan and methodology has to be meticulously followed. Is that it should be as the state levy or the central levy. It cannot convert to IGST. Let's take the next slide. Okay, we've taken a simplistic case study to illustrate the points. So, assuming company XYZ has advertising company P provide services to it concerning product A, that's given in red in your screen, and this product A is essentially, advertised, publicized over national television, but the effect for it is only in respect of states E, F, and G. These are where the units are, where they are sort of used, where they are made. On the other hand, we have advertisement of product B, which is in blue. But this particular advertisement services from company Q is only in respect of, or the beneficiation is only in respect of state H. So what does happen is, as you will see, that the credit for, sorry, you can go back to the slide, the previous slide. The credit for what emerges from advertising company Q will only move and get distributed specifically to state H. Whereas what is advertising company P's services and concerns product A will move to state E, F, and G. The distribution will happen all over there. And because the benefit also goes to G for the other product, there will be a distribution even there. So P goes effectively across, whereas company Q will limit and restrict itself to state H, where it is effectively on a one-to-one basis, so to speak. Right. So this sort of just explains that and summarizes it. So
So Ranjit, while you had put this question and the answers, and this was something that is important for everyone to understand, what happens, and you would mention that for distribution, it shall be the turnover of the preceding financial year. If you don't have a preceding financial year, preceding quarter, what happens if there's a new registration that has been there on record, and that it does not really have a turnover either the preceding financial year or the preceding quarter? Then do our taxpayers still distribute credit to such new unit, or there shall be no distribution at all?
Well, answer to that, Kulraj, is there should be no distribution in that period. So if I take the illustration again, between April to June, there wasn't an existence. Rather, it came into existence at the end of June, and therefore in July you're effectively trying to make a distribution. So in that period, there will not be a possibility to make a distribution, and only going forward. So effectively, starting July is where you will have the turnover, and you will be able to say that the previous quarter turnover is July to September, and that period turnover can be used for the purpose of distribution.
Fair enough. So Nijat, while we have discussed the mechanism, it becomes important for everyone to kind of understand what kind of compliances are there under the ISD regime. When is the return that is due file? And in the next slides, we'll discuss that up. So typically, till now, taxpayers have been used to filing the returns in GSTR1 and GSTR3B, which was due in 11th and 20th. There shall be a third layer of return that shall come into picture in form of GSTR6, which is an ISD return. This return is due on 13th of every month. So we have taken an example of April to kind of update when is the return filing date due. So it becomes due on 13th of every month. Unlike 2B, which is the foundation of taking credit in 3B, here the every data comes across in form of a separate form called 6A, which culminates into 6, which is the transfer return in form of ISD. So therefore, And 6A by nature is very similar to 2A, which was there in existence sometime before. 6A is a dynamic data. It is not a fixed data. So therefore the data keeps on changing as the invoices keeps on uploading. But yes, taxpayer will have to take a cutoff of whatever invoices are there before the ISD return is so filed, and whatever is coming in 6A, they kind of match it with their purchase records. And if these invoices are found to be valid, they record them into as a transferee credit, and therefore the transfer shall happen in ISD returns, which is GSTR 6. So therefore there's an added compliance in form of matching, which is through 6A, and a transfer which shall happen through GSTR 6. The ITC that shall so be transferred in GSTR 6 will ultimately be a part of 2B, which gets reflected in 14th of every month to the taxpayers to file the GSTR 3B. When we talk about compliance, there are certain aspects that a taxpayer would need to be closely engaged with and understand with. And as we mentioned, we will just highlight those some of the typical key important aspects. One aspect we discussed whether matching is so important. The answer is so. The matching becomes important. Whatever is reflecting in 6A would need to be mentioned, match with the recipient's book, so that therefore the credit that is so transferred is correct. The accounting entries, as we mentioned, for whatever credit is availed or whatever credit is booked as an ITC by an ISD in April would need to be distributed in April only, cannot be so shifted to May. Or whatever credit will be booked in May can so be shifted to May, but month on month it will be a nil. So ISD will not really carry forward. It does not have any electronic credit ledger of its own. So it will just take it and transfer it. So it's typically like a in and out system. When we talk about in length and month, what is important for us to understand whether the 180-day milestone or the November timeline is so applicable to an ISD, and it becomes a question mark whether because this has to not be debated too much. And then therefore we will kind of discuss in a minute's time. But yes, this is an important aspect for everyone to understand. An ISD is not required to generate an e-invoice, so a normal ISD invoice is not required an IRN validation, so that can sail through. What is important for everyone to understand is there is a mechanism of an ISD debit and credit note as well. So if ISD has issued an invoice, but the original supplier issues a debit note to ISD for such invoice, the ISD can subsequently raise a debit note to further pass on the credit which is there in the debit note, and so on will happen with credit note, and subsequently ISD can raise a credit note. If ISD subsequent to transfer of credit believes that it has transferred an excess credit to the unit, it can again raise a credit note reducing the original credit. And likewise, if ISD believes that the credit transferred is less than what the credit has been there on the invoice, it can raise a debit note to transfer subsequent credit. So therefore, these are important concepts under the ISD regime as far as compliance is concerned, which a taxpayer needs to be so cognizant of. Before we move to the transition to an ISD, what a taxpayer would need to do, I think we need to discuss, Ranjit, the concept of 16(2)D, which is 180 days timeline, and the November 2024 ITC credit. So I'll give my perspective, and Ranjit, you can then share yours. So
yeah, so let me just maybe put up a preface to that.
Yeah.
So you talked about these compliances or these provisions in the law that need to be taken care of or adhered to. In an ordinary situation, a service receiver or a receiver of goods is obliged to make sure that the payment is made within 180 days. That's a second proviso to Section 16(2)D. In terms of taking the credit, the cutoff period is really 30th of November. There is some debate about whether it is in the books or in the return and all, but that's a separate point. The question is normally for a receiver of goods or services to adhere to that. Now, as we are in ISD's registration, and we are talking about ISD having obtained, having received certain amount of credit, and it wants to distribute, is it obliged to make the compliance with these provisions? Is there an onus on this particular registration? Is there an onus on some other registration which is ultimately going to beneficiate? And if you do think that it is actually the beneficiating, receiving, or the distributing unit, then how will it work? Because they would not have the ability to know where and what is the underlying or the source invoice and the source party, and where would they be then in the position to comply? Now compound that with the fact that the provisions for recovery of any credit that is distributed incorrectly and contrary to the provisions of the law is to be recovered from the distributee unit. So when you put all of this together, what is the position of the ISD registration, legally speaking, and what is this, sort of compliance that they need to adhere to?
So, Ranjit, and that's a very important question, and probably not something that has been debated across length and breadth in forums. ISD, as you mentioned, while being a registered taxpayer, a registered person defined under the GST law, it does not really have a capability to avail any credit, and therefore it doesn't really have an electronic credit ledger of its own where it books the credit. So therefore, the important aspect, and you mentioned it rightly, then the recovery provisions can only be initiated for the person to whom which recovers, avails the credit, which are the recipient unit, ultimate recipient unit. But being in a fiduciary capacity of receiving the invoice, ultimate provision applies in our view to ISD. So an ISD, when availing or a booking of a credit, will need to ensure that the payment is made within 180 days, or whether the invoice is booked within timeline or it's a limit, it's the invoice is barred by limitation, it is a post-November booked invoice or so on. And if it does not comply with that, then ultimate liability shift to the recipient taxpayer. And if an ISD believes that if it has taken a credit but it has not made the payment within 180 days, then in our due consideration, it would require to be issue a credit note to the recipient unit telling them to reverse credit because the compliance has not so been made by an ISD. And whenever the ISD makes a compliance, then a reavailment can happen by the recipient units by way of a debit note or so. But yes, the entire issue of debit and credit note, while being kind of considered through a price increase or price decrease fundamental, will require to be tested in principles of an availment of a credit post November timeline or within after 180 days period. In our due consideration, both obligations remain on ISD, and therefore ISD needs to keep a track on a check on it, and therefore taxpayer will have an added compliance there too. If it so happens that an invoice has not been paid within 180 days, ISD would require to be passed on requisite instruction to the ultimate recipient to reverse the credit and then reavail it whenever the payment is made. But yes, these are important aspects, not so been tested again, I would mention. But yes, our view remains that liability is of recipient, but the onus to pass on the requisite instructions is on ISD only.
Thank
So,
you.
Ranjit, when we discuss all these aspects around ISD, and we discuss the emerging aspect, the legal aspect, the compliance, how do you think the taxpayer should transition now to ISD? Because it is now the time we are sitting on January, and January is going to end very soon, and April is going when ISD becomes mandatory. So, what are your optical thoughts that how taxpayers should really transition to an ISD regime?
Yeah, well, I think this probably is the more important point and aspect to discuss. While the law is there, the practice that has been in place previously, all of that is there. The real deal is really here, and I think that's where Tapas, Neeraj's team are going to be able to bring in some sort of value addition to say, technologically, how can this entire effort be supported or be augmented, so that you really don't have, lapses, you don't have complications, you don't have challenges, going forward. So while I talk about the quick points on transition, I think then Tapas will have to, take up on the IT related piece, the infrastructure on that, and, really how processes can be brought in place to manage this better. Well, will you take the next slide?
And before you go into that, Ranjit, there is also a question from the audience asking that do you see any chances of this getting extended because we have a very less time available? You do please cover that as well.
Oh, as far as guesswork is concerned, I mean, I have no answers to say, really speaking, but I don't believe there is inadequate time. See, the 52nd meeting itself, this was sort of made clear, and the 52nd meeting was in the October of 2023. Okay, now if after a year plus someone is going to come back and say, "Hey, I think this is not enough time," I think they're really joking with us. Okay, it's not fair, it's not appropriate. that, that at this stage, and even now, today, as we sit in the middle of January, where we have, 2.5 months to go, that you say that you do not have adequate time.
Yes, I mean, that's what, in fact, in August 2023 is when they said that this is going to be effective from 1st of April 2025. We are all aware from August 23 that this is going to come. Probably we had sufficient time. Yes, Neeraj, sir.
Yeah, it's very clear there's not going to be any deferment of this. So let's accept it. It's 1st April is the deadline and we work towards it. It's like I have not heard any conversations anywhere where it's going to be deferment for this.
Yeah. So with that clear understanding, let's look at the way forward. Okay. Now the way forward is something that we will probably have to look at from the bottom in this case. I think to my mind, that's probably the most important, is that the training that needs to be imparted to the team members, the vendor community, the IT infrastructure, and everyone around that will support the entire effort on ISD. Right. So in my mind, that is the most important first step. Okay, then there will be way forward in terms of vendor communication, vendor sort of, emails, vendor trainings, etc. There will be a change in the GST-IN because the effective invoicing must come into the new GST-IN. If you do not have the ISD registration, then you need to go out there and take it. Once you take it, then you're able to communicate it. Okay, now in the back end, in your own systems, in your accounting systems, in your ERP systems, there will have to be a coordinated and synchronized set of efforts. So open POs, what do you do with them? Fresh POs, how do you issue them? How do you migrate the existing running POs into the new system as you go into April 2025? Okay, those are all steps and actions that will need to be planned out, charted out, and work sort of will have to be done on each of those fronts. Then there will be activities in terms of issuing, all your debit notes, credit notes by the vendors for all the earlier transactions, which maybe in the position where you did not have a GST-IN for the ISD. So what will be the mechanism to sort of work and address those? That's also an important step. Ensuring all of our ERP is aligned and is in sync with what the requirement of the law is and as the design is an important one. And that's something that may need time. Tapas, as you had asked whether that timeline is going to get extended, this probably will need time and quite a lot of time. But no one can say that they were not allowed sufficient time. Would you like to take the next slide? So just, again, putting it in a slightly different way, what are the key actions or the steps? PO has to be issued. We have to be specific and careful. Then you identify the category of the service. Is it specific to a unit? Is it common for multiple units? Is it common for all units? Because that's what will determine the sort of distribution. Okay, the invoice receipt. So you ensure that now onwards, going forward, the invoices coming from the vendor are properly and particularly recording the correct GST-IN, because if that's not happening, then your credit gets compromised. Accounting. And I think this is probably one major area or one really important aspect. It's not just accounting, it's accounting, your ERP system, your accounting system, your IT software. It all has to be integrated in such a way, because the PO will get issued from there. The account receivable will get sort of generated from there. The invoice inward, the invoice booking will all sort of get routed through that. So it's important that the entire ecosystem is aligned and completely tuned together to make sure that this gets completely correctly captured. Okay, then the donkey's work, if I would call it that, the distribution, the actual issuing of those invoices, the distribution to make sure that the credit moves downward, right? That's the every day or every month on month that you will have to make sure you're doing. Thereafter, once you have your systems and your processing in place, it'll be a matter of routine that you will comply with this. People
So Ranjit, last slide, you would want to take us through the illustrative list how the things should evolve ideally in a situation in ISD.
Yeah, no, this is illustrative, and before we go to Tapas to sort of walk us through some of the processes and technology aspects, nature of the service is what we're talking about, and there are two categories or types that we have identified and bifurcated. So, assuming that there is rent services, security, repair and maintenance, housekeeping, and the like, right? Now, these are essentially state specific, and to the extent that these are given to a particular recipient unit with its GSTIN, there is nothing that needs to change. There is no alteration required in your existing practices. It continues as is. Okay. Now let's look at certain other category of services, general insurance, advertising and marketing being one common prominent one, software license claims, possibly professional services invoices. Now, these are usually and typically common to more than one unit. Okay, they could be to all, they could be to multiple, they could be to few, whichever. Now, these will have to be identified, mapped out, and then therefore they have to be taken in as a ISD registration, as in the inward, and thereafter the distribution has to happen. So the bottom row is where the focus really should lie, and that's where the activities will have to be taken care of and taken up by the taxpayers. So this is the sort of broad level summary of the types of services.
So, Tapas, why don't you
Okay,
now
yeah.
take the audience to the IT thing and how Cygnet does well in this entire scheme of things for us?
Sure, Prakash. Thanks. Indeed a wonderful session. I think a lot of questions which came in the entire session, probably most of them were answered. But before going into the Q&A, let us we'll also show how we are trying to simplify the ISD stuff. I mean, the question that came in from the audience naturally, I mean, seems that it's a tough task to move ahead, and one should, if not yet started, should really start thinking on what are the mechanisms and how one should be looking at it. But here are some of the solutions that we have developed. So what I'm going to do is I'll first show a video where we will show you the cockpit that we have developed for SAP. My screen is visible. So and then just quickly show it as to how you can manage this entire availment of ISD as well as the distribution of ISD credit within the ISD itself. There is a functionality, standard functionality available within the SAP, but we have received the feedback from the client that it's too scattered and a user has to go to a lot of places. So we have developed this cockpit where it's an entire journey, a logical journey where you will be able to distribute all your input tax credit once the reconciliation, etc., has been done. So the first window that we are looking at is the base screen, where you will be able to apply a lot of filters in order to go to certain respective invoices that you want. This is the selection screen. The dates are being selected. So let's say the user has selected a company code 2000, the financial year, and in the financial year they have selected the posting date, and again the route is being selected. And once this is done, and this is executed, it will take us to the screen where you will be able to see all the line items of each and every invoices. And these invoices so again, the taxable value. This is all sample data which is being shown on the screen, but this is how you'll be able to see all the invoices based on the filter that you would have selected. And once you have certain invoices that you want to distribute out of the filters, you can select distribute to business place. And once you have selected that, it brings us to this window where you will be able to select the recipient business place. So first we selected this criteria, then went to the individual invoices for that criteria. And now from those invoices, we are selecting certain invoices which we want to distribute. And now the user is able to select the business place where this credit has to be transferred. So in the given example, the sample turnover is there. So we have selected 3 business places as a sample, and the turnover is already there for these 3 business places. So since there's only 3 business places were selected, the ratio of distribution between these 3 business places has been calculated by the system. Once this ratio is available, the document is now available for verification based on the distribution. So if you can see the business place and the amount of tax that is distributed to all the 3 business places is available. So For verification purpose, this pop-up shows that this particular invoice, this is how the credit is going to be distributed. And once you are okay with it, you can select a specific invoice and then click on post document. If you're selecting both, the posting would happen. If you're selecting only one, then also posting would happen. And once you select on post document, the system would ask you as to what is the document posted that you want that gets displayed there. And these are the entry that comes in. You will be able to see that. And then you go to the distribution report where it will show you the entire chain of invoices where the distribution was done as the distribution has happened. The invoice-wise detail that we saw earlier. So during the entire selected period, whatever distribution has happened, the line item-wise details of this distribution can be seen in this distribution report itself. It will show which invoice has been distributed to which business unit, so on and so forth. All these details would be available. Similarly, then we have that generation of ISD challan, which we call the print ISD invoice. Once the distribution, etc., has happened, you can go and select the ISD invoices that have been the distribution that has happened. And then once that is done, there are various filters, etc., all those different kind of filters that are available. You can select the relevant invoices and then click on generate ISD invoice number. So for relevant for each and every, or even if you want to do on a combined basis, once you select the relevant documents, you can click on generate ISD number and ISD invoice, and that creates an ISD invoice. And at the end, this is an optional functionality that has also been provided that would enable the users to generate the ISD invoice or print the ISD invoice in the form of a smart form, what we call the ISD challan. That challan gets generated, and if you want that one ISD challan takes care of multiple invoices that have been distributed, there is also a functionality that once this invoice is generated, that invoice would have the details of all the inward invoices which have been transferred through this ISD challan. So this is the SAP cockpit that we have developed, and this can be customized based on all the users' requirement. If you don't have SAP or the users are using our Cygnet portal, I will also quickly quickly demonstrate how the Cygnet portal works on the ISD distribution. So first of all, we have something called manage organizations. You can go to the organization, select the entities, and you can set the turnover. So for each year, as we said that the distribution happens on the basis of the turnover of the previous year, the user can come here to the manage entities, select the relevant GSTN and select the turnover and feed in the turnover for the system. So as and when you have to do the distribution, you don't have to think about it. This is freezed once and for all. And we are giving different options for selection of different financial years. This is of course a demo file, so only previous couple of years are available. But as we discussed during the session, that if a new registration is taken during the middle of the year, you would have to distribute the ITC based on the turnover of the previous quarter. So those are options are available. You can come here and set your turnover. Once that is done within our GSP only, we have this ISD module wherein you can go to the GSTR 6A reconciliation, wherein all the inward invoices that would have come to your in your GSTR 6A for reconciliation, the system does the reconciliation, and people who are using Cygnet's portal are aware that Cygnet's portal does an AI-based reconciliation where your normal match by tolerance, etc. does happen. But then we also go into an AI-based reconciliation where we give 28 different buckets of reconciliation, which we call near match. So once that reconciliation, etc. Has happened, this window shows the reconciliation section. So once that reconciliation has happened, the reconciliation can also be seen for each vendor separately. And after the reconciliation, you come to the ISD distribution window, wherein you can select the relevant invoice that you would want to distribute. And once that is selected, the user can go to action and select distribution and do the distribution. So that is how the distribution, etc. works. Just give me a second. Yeah. There's some issue with the so we have something called distribute ISD, where the distribution etc. can be done. But then again, within this window, you will be able to see all the different documents through which this amount has been distributed. It also shows the distribution turnover, etc. The user can also go to the relevant window and can also manually change if at all the distribution etc. is required to be changed slightly manually. And once the distribution etc. Has been done, the document-wise details of all the types of transactions where you would want to make the distribution etc. is done. The Cygnet portal also enables you to generate what I was showing earlier, is that once the distribution has happened, the user can also come here and generate a distribution document. So whatever invoices have been distributed, you can generate the distribution document, which you call the ISD challan, and that ISD challan would have the underlying invoices from your vendor through which the credit has been passed on, and that credit would also be the ineligible as well as the eligible credit bifurcation. So that is also there. And what's that is that the distribution happens through our portal only, and everything a single source of truth is available within the same portal. All the regular returns as well as the ISD returns, if filed through the Cygnet portal, the records of ISD that was availed, the reconciliation status, the distribution, as well as the documents that were generated for distribution, along with an annexure of the underlying documents through which the distribution has happened, and finally the filing of the GSTR6. Everything happens within the same window. Apart from this, there is a third solution that we have, which is used through our proprietary bot mechanism. So if there is some ERP where the kind of cockpit that we have mentioned is not available, or there are different sources of documents which come in through which the documents of come in for the ISD distribution, we have our proprietary RPA tool which picks up all the invoices, and based on the criteria that has been provided, the distribution, the ratio, etc. is calculated, and on the basis of the selected business places or the GST location, the recipient GST locations, based on the predetermined documentation, the entire distribution happens. So these are all different methods that we as Cygnet provide in order to enable companies to navigate the compliance part of the ISD, and we will be happy to take that discussion through our team if anyone is interested on a detailed demo. Due to the paucity of time, I tried to show the important features within the given frame of time. And I think if we have some time, I will take up a few questions. Just allow me.
Yeah, Tapas, we jotted down some questions, which we will and me and Ranjit will answer. So the first question that happens is that, and we had mentioned about Rule 54(1)A invoice. The first question is, can the 54(1)A is a common route or is an exception route? Ranjit, would you want to answer that up?
Yeah, I think the design really is that it's an exception, but I don't think there is any barrier if this was to be used commonly. It would be a bit administratively problematic if you did use it commonly. Let me explain this. If you have in one state a GST regular registration, and in the same state assume you have a ISD as well now, if you continue to receive all the invoices in the regular registration, and then you move it to the ISD, and then the ISD moves it on further, really you're not serving anything by having that ISD in there. Okay, it just adds to your administrative burden. So rather the thing would be to say, put it all onto the ISD registration, the invoices as an income. And that's where it makes sense that it, in a situation where as an exception, some invoices come and you realize it's not a credit that can be used by this particular unit, and it therefore must get distributed to the other units in the country, it will be transferred into the ISD, who can then move it on further. So, that's how I see it. Meant to be more as an exception, as a facilitation, but in instances it could be used commonly.
Just to add, when this provision was recommended, the GST Council minutes also say that this is meant probably only for those RCM invoices which come in, that has to be booked by the recipient location and then transferred to the ISD. But the way the section has been drafted doesn't show that intention. But what you've suggested is correct. I mean, it has to be done only in exception cases, and it should not be a practice that you receive invoice, interchangeably, and you keep transferring within the same state.
Yeah, that's right, Tapas. The second question is related to this one is the changes made in GST portal where taxes can be paid through of RCM taxes can be paid through ISD. Till now, the changes have so not been made, but we are expecting some similar changes to happen very soon. And if it still does not happen, the route of payment through a normal GST and then transfer through an 54(1)(a) invoice should so be adopted. The next question, Ranjit, for you is, can HO rent expenses be done through an ISD or mandatorily shall be a cross-charging mechanism?
So on the understanding that the credit, the charge is for a C+S of that particular state, the idea would be that it's local to be consumed there. And for us to distribute it may be a bit of a challenge because it's meant for that particular registration for that particular state. So it would seem to me that as is would not be possible to distribute. What could instead be looked at is whether there is an arrangement for some sort of an infrastructure support services that, the head office could say that it is rendering to the other units. And through that mechanism, as a, more sophisticated cross-charge arrangement, that it goes out. Okay, now that's just one thought around.
So, due to paucity, Tapas will take the last question here, and then we can probably answer every question in an email format because we will have these details available. Ranjit, last question, I will take it. And how would the assessment of an ISD take place? That's the question. And to that answer, ISD does not really have currently an assessment or an audit status to it. So technically, the audit or a recovery proceedings can only be initiated by to the normal taxpayer. So ISD is only passing the credit. Assessment audit shall all be happen at the normal unit level. At a normal unit level, the authorities may ask the details about ISD, but ISD per se will not have any audit assessment of its own. Neither there will be a 99C that would be required to be filed for an ISD. With that, we will conclude this session. We have a lot of questions on hand, and we should be able to get back to you through an email communication on answers to that question. Tapas, would you have any, or Rajit, would you have any closing thoughts, and then Tapas can follow through?
No, I think people need to just get down to it and sort of get acting. That's the real messaging that we have to do. Nothing other than that. Tapas, please, Neeraj.
Yeah. So I had three pointers onto it. First, because there were three parallel conversation along with the webinar. There were two private client webinars and meetings also going on. And honestly, my take is the understanding on the ISD is very low as far as the industry is concerned. So that's the biggest challenge. Second thing is, without technology solution, this is not going to be thing. Third thing is, this is very, very state specific subject because all the states now want more and more GST revenue, and they are going to literally send maximum possible notices on this particular topic. So that is something. Fourth is, please do not flood your ISD registration with cross-charge invoices or self invoices because that's going to really make a hell for you coming in future. So that is an area you should be very, very cautious about it. And maybe whatever debates are required, I think we have more than 57 questions in the chat box, and it's a lot for Dhruva and Cygnet team to respond to all these questions, but we'll definitely do it the way we had done for IMS. So that is something we'll get back to it. But the subject needs debate, the subject needs understanding, and the subject needs technology solution. That's all I can say on to this. Tapas, if you want to have
Absolutely.
this, yeah.
Oh, wonderful. I think, and yes, I mean, very rightly pointed out, we do have questions from legal as well as from technology front. Somebody has also asked that this was for SAP, whether you have any solution from for Microsoft, etc. We'll reach out to those participants separately, and would like to extend sincere thanks to Ranjit and Kulraj for effectively, at least for those people who were at the stage of thinking whether ISD is going to be extended or not, to bringing them at an understanding that yes, this is going to come, and these are all the challenges, right from the basics of understanding why ISD till how the ISD is going to be implemented. I think it was a wonderful interactive session that we have had. Thanks, Ranjit, Kulraj, Neeraj sir, and Cygnet team as well as the Dhruva team for making this happen. We look forward to have more such similar sessions on a couple of other topics, and then we'll see the audience soon. Thank you everyone for joining in. Wish you a very good evening.
Tapas. Thank you.
And thanks, Nishita, for putting all this across. So thank you so much. Thanks for that.
Thank you, everyone. Thank you for joining. We'll share the presentation and we'll try to answer all your questions. So yeah, I think let's call it for a day. Thank you.